What's going on, everybody? It's Chris Newton here, Chris Newton Real Estate out of New York. Everybody knows how to get in contact with me. If you don't, it's Chris Newton Real Estate. Instagram, Facebook, my website, chrisnewtonrealestate.com. Twitter or X, Twitter X, X Twitter, whatever you want to call it, is New York's agent. My YouTube channel, obviously, you guys can see is Chris Newton Real Estate. So I try my hardest to make it as easy as possible to find me. The reason why is New York's agent on Twitter is because Chris Newton Real Estate was too many characters. They wouldn't allow it. You know how Twitter is with characters. Anyway, so what are the steps to getting a mortgage? What are the steps to getting a mortgage? Now, I'm certified in mortgage loan origination, right? Not licensed, but I'm certified in mortgage loan origination. So I know a little bit about this, right? This is what you want to do. You want to get a mortgage. The process in home buying. Number one, finance. You got to get the financing, whether you got the cash, um, whether you got other type of means of getting the money or coming to a negotiation or meeting other minds when it comes to, the barter system, or you want to do it with the bank's money, right? Financing is what we call it. Basically, the banks typically want 2 years of proof of funds, right? Proof of funding. So your W-2s or 1099s for the past 2 years. If you've been a W-2 employee and you plan on switching the year that you're about to get your mortgage, don't switch. All right. If you've been a W-2 employee, you want to stay a W-2 employee until your loan closes. If you're a 1099 employee, you want to stay a 1099 employee, well, worker, contractor, sorry. If you're a 1099 worker, you want to stay a 1099 worker until your loan closes. They need this for 2 years. So even if let's say you are a W 2 employee for a year and 9 months, right? And you were making 100,000. You start to work for yourself, or you move into a position in your company to where now you go from a W 2 to a 1099, and you might be making more, right? You might be making more. You might go from 100K to 150K. It's not going to work with most banks. Reason being is because the banks now don't know how to calculate your taxes, right? When you're a 1099 worker, 1099 contractor, you pay your own taxes. So, you have tax deductions and you have write-offs and so on and so forth. So let's say you make 150,000 cash in your pocket, but now you got $75,000 worth of tax write-offs and deductions. To the banks, you only made 75,000, so you made less. Or maybe you wrote off $100,000 worth of stuff because you don't want to give Uncle Sam his money, right? To the banks, yes, we see that you have 150,000, but we can only go off the $50,000 that you paid yourself, right? That was taxed. We can only go off the 50,000. So you went from 100,000 taxed, right, as a W-2 employee to in the bank's eyes only making 50,000, right? So you got to make sure that part is set up. You also got to make sure your credit is good, right? Now, some banks do like a 550 or 570 or whatever. Your interest is directly tied to your credit. A lot of people don't tell you that. A lot of banks won't tell you that your interest rate is tied directly to your credit. So what does this mean? You want to make sure your credit score is good, right? You don't want to seem like a risk. The bigger the risk, the more money the bank is going to say, listen, we're going to do this. We're going to take this risk on you, but you're a high risk, so we need more money. That's basically what the interest rate is saying, right? So the lower the risk, the lower the money. There's still going to be a risk. So that's why there's always going to kind of basically be interest. There's always a risk, but you're just a lower risk. We trust you more. Make sure there's no derogatory statements or items on your credit list for the past basically 2 years, but probably want to go back as far as you can, right? You want to be as trustworthy as possible. You don't want to use your credit too much, especially when you're getting your bank statement. I mean your pre-approval. So you don't want to use your credit too much. If anything, you kind of want to pay it off, a few months in advance and just not touch much of anything or pay it down as low as possible. There's something called a debt to income ratio. So they're going to look at how much debt you have compared to how much income you make. And if it's going to be just you, or maybe you and your partner, or whoever's else going to be on the loan, and being on the loan and being on the deed is two different things, but that's for another story. You guys want to make sure that your debt is as low as possible, as humanly possible, until you're comfortable though, and your income is as high as possible, so everything can look good because there's a ratio system that they go on. So they're going to ask for 2 years of W-2s, 1099s, 2 years worth of tax returns, 2 to 3 months of bank statements, 2 to 3 months of pay stubs, employee verification, an employee verification letter. This is going to let the banks know that you make this amount of money. Right now, let's say you quit your job or something happened, you move from one job to the next. Maybe making the same amount of money, a little bit more, maybe a little bit less, but you're still making good money, but you just changed jobs. If you can get a letter from your new employer or your new position saying that, let's say Christian Newton is salaried, which means you're going to make this money. It's not based off an hourly wage. It's not based off of overtime. Christian Newton is salaried 120K this year. The banks can use that. Most banks will use that because you just switched over, but now they know that you're going to make this money. It's not, it's not just going off of a pay stub or two pay stubs. No. You're salaried for this money. So you get a employee verification letter. So they're going to want that. They're going to want to see the money in your accounts. They're going to want to see activity. They don't want to see that you was broke. It's June and you got 120,000 in cash in your bank account, but in May you was just at zero, but there's 118,000. Like you was at 2,000, and 2 weeks ago there's 118,000 on deposit from your mom. They know what's going on with that. You don't want to do that, right? You don't want to do that. So these are the steps. You get all of this information. You go into a bank or lender. You try to interview as many as possible. Now interview them. This doesn't mean that you just allow them to run your credit, right? You interview them. They're going to interview you, but you also interview them. You ask them their terms. You ask them, they don't just go for the interest rate. You ask them their terms. You ask them their interest rates. You ask them what's needed, right? And you go to more than one. I want to say you go to about 3 to 5, maybe six, but that's kind of pushing it, right? Don't have them run your credit immediately. No, 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 no. You had that conversation with them and you allow them to give you what is called a pre-qualification letter. So this is basically what they'll do to assume what you're going to make if you're approved for a pre-approval, right? So that it doesn't go under underwriting. It doesn't go under anything. It's not loan processed or desk underwritten. No, it's basically an assumption based off of what you told us and the information you've given us without running your credit. This is what you may be approved for, right? You can do that with as many banks as you want. It's not going to touch your credit. It's just you now getting information, right? Now, based off these loans, I want you to take a notepad, maybe a composition notebook, and I need you to write down everything that they're saying to you. Don't just have them print out all of these terms in this booklet that you got 30 booklets. No, write it down, talk to them in a way that you need to be spoken to. Write it down in a way that you understand. And then if you need to compare and contrast with the booklet that they give you, that's totally fine. But that's what you want to do, right? Then when you're comfortable with whoever you're working with, it also personality also goes into it as well. So the bank could be great, but if your loan officer is terrible, doesn't communicate, he doesn't whatever, he just wants to get a deal and that's it. It's not somebody you need to work with. I'm gonna be real with you. It's not. I gotta keep it real. It's not. Yeah, the terms might be amazing, but this guy's an asshole, or this lady, she doesn't care, she has a nasty attitude, or whatever. You need to work with somebody that's going to be a good fit to work with you. Okay? Somebody that's going to break down everything for you and let you know, because based off your situation and your goal, Because yes, the goal is to purchase a house, but maybe your goal is to not pay so much um in principal, right? Maybe your goal is not to pay so much, like make your mortgage payments as low as possible. Maybe your goal is to flip. We don't know, right? So you need to let them know what your goal is or what your goals are, and then you go from that. And if they're able to help you with your goals, then yes, you can have 10 people in the room that want to buy a house. Everybody's going to have different reasons and different goals. So you need to let them understand what your goals are with this purchase. Why are you purchasing? How do you want this purchase handled? You know, what's important to you about this deal? Is it just getting the lowest price? Is it, you know, what mortgage can you afford? Because you might be able to, in a bank size, afford $7,000, right? But you really only want to pay $5,000, right? Based off the interest rates and based off of the climate of what's going on. Okay, so your pre-approval needs to be this, or it can be somewhere like that. But we need to do something to get the points down. We need to buy down this interest rate. We need to do this. We need to do that, so on and so forth. And now it's time to strategize together. You need to get a real estate agent like me that's going to be able to go to the mortgage lender or the loan officer and now also communicate with them on what your goals are. So now we know how to formulate the offer in your best interest. Thanks. So those are the steps of getting a mortgage. So you get all of that paperwork, you submit it after you're okay with the pre-qualification, you submit it, you move forward with the pre-approval. Once you're pre-approved, you should have stopped using your credit before then. Once you made it in your mind, you're going to go into these banks or go talk to these lenders, you should have stopped with the credit. All you got to do is pay down your credit. Once you are pre-approved, you are in credit purgatory. Do not touch your credit, period. Right? Pay it down. That's it. Don't buy furniture. Don't buy candles. Don't buy Skittles. Don't buy lollipops. Don't buy Jolly Ranchers. Don't buy chairs. Don't buy a computer. Don't buy AirPods. Don't buy pens on credit. Okay? That is it. Bring your credit down. Bring your income up. That's what you want. You want to make that DTI, that debt to income ratio, as far apart as possible and keep it there until you are closed. Not the day before closing, not the morning of closing. No. After everything is signed off and sealed and the keys are exchanged, buy all the furniture you want. Max out your credit cards. Do whatever you want. I don't care. But from the point you make the decision that you want to purchase to the time that you sign the deed, you do not touch your credit. Don't buy nothing on credit. Period. Don't do it. Don't do it. Don't do it. You're going to get in contract, and they're going to have to run your credit again, right? Because after they run your credit the first time and get the pre-approval, they have to make sure you're good for the loan again. So about 6 weeks before contract, they run your credit again to make sure everything is good, and I believe they do it again right before closing just to make sure you don't quit your job, because they will call your job to make sure you're still there. Don't do anything rash. Nothing, nothing, nothing. You want to quit your job? Wait till after you close. As soon as you sign, call your boss and say, screw you, I'm done. Fine. Up until that point, that's it. All right? Those are the steps to getting a mortgage. You got more questions, give me a call, 347-993-0051. Chris Newton, right? Call me Chris. Hey Chris, I saw your video on YouTube. You know, I have questions about this. Sure, let's talk. Um, email me, hey Chris at chrisnewtonrealestate.com. Hit me in the DMs, follow me, like, comment, subscribe to this channel. And tell a friend and tell a friend and tell a friend. Here to help. So be guys soon. Later.